Hey everyone, me Kevin here. Wow, the Robinhood and GameStop saga continues. It's so intense that there are now rumors that Robinhood is limiting the amount of shares of GameStop you can own. And folks, this is intense. It's so intense that I just invested $250,000, $250,000 into... Wait for it. I'm going to explain. First, I just want to quickly mention that I got 40 emails this morning from people literally asking, hey, is there any way we can wait a few days to extend the birthday coupon code? And I will go ahead and do that. I'll extend the coupon code until February 2nd for the birthday code linked below. Okay, folks, so on January 28th, my birthday yesterday, Robinhood and other brokers shut us out of GameStop, AMC, and other volatile symbols. M1 Finance and Webull, they blamed Apex Clearing, and Robinhood blamed themselves. That did not do very well for Robinhood, because if you look at the Google App Store, well, let's just say they're not doing too well. Now, congressmen and congresswomen, Elon Musk, Chamath, and others have joined together bagging on brokerages for ripping off the retail investor in what clearly came across as favoritism to the wealthy hedge funds. That is, it doesn't smell good. Well, we know that Robinhood makes profits off of our free trade, and they do that in partnership with firms like Citadel, who is a firm who helped inject $2.75 billion into Melvin Capital, who's bleeding money from their short bet against GameStop gone wrong. Melvin and other short sellers have lost billions of dollars, and retail investors are winning here. Now, while Robinhood took the blame for refusing to allow new purchase orders for certain stocks, which definitely came across as, to many, market manipulating, especially since when you shut out an entire group of buyers and potentially only allow people to sell, you end up triggering more stop-loss sell orders, and you end up leading to a stock price collapse, which is essentially what happened yesterday before rebounding as trading resumed on many platforms. As a result, Robinhood, of course, has 2 class action lawsuits filed against it just yesterday. I'm sure there'll be more to come. They posted a job opening for a federal affairs employee to help them through this, and the SEC is already investigating. The SEC this morning released a statement vowing to protect us as individual traders and promised to scrutinize actions taken by brokerages that, quote, unduly inhibit their ability to trade certain securities. They said, quote, we will act to protect the retail investors when the facts demonstrate abusive or manipulative trading activity, the SEC said. But what is happening now? Or better yet, what happened and what led me to just make a $250,000 investment? Now, let's go ahead and jump into this here chart. This chart has to do with my $250,000 investment, so I'm going to give you a very, very brief explanation of this crappy, ugly, complicated looking chart. Let us play a game. Let's say that you are investor 1, and because I'm always buying, let's say that I am investor 3. That is, I am going to buy 100 shares of your $10 stock, whatever stock that might be. That is worth $1,000. So what happens when we execute this trade is you place your sell order, it goes to the exchange. I place my buy order, it goes to the exchange. Boom. We get a trade confirmation. You feel like you got an extra $1,000 in your pocket. I feel like I got $1,000 out of my pocket. But see, the problem is before our money exchanges, it actually has to go through a central securities depository, and then there's a counterparty to this, which means that my $1,000 of cash over here at Webull does not actually go to you in the form of $1,000 of cash for a couple business days. And sometimes that means over a weekend, because weekends aren't business days. Now, the issue here is, what happens if there are thousands of people like me making really risky purchases, right, over here at Webull, and all of a sudden all of those purchases go bust before the money has traded hands, and then I screw Webull out of a ton of all the margin debt I have with Webull, and there are a ton of people who screw brokerages out of a ton of money. All of a sudden, the brokerage here who promised the centralized clearinghouse that, hey, look, we're promising you we are collateralizing this transaction with a percentage or a larger percentage of money. If all of a sudden we go bankrupt, well, then Webull takes the hit. If Webull takes too much of a hit, Webull goes bankrupt. And the centralized securities depositories, they saw this potentially coming. So they said, hey, rather than taking a 2 to 3% collateral on every trade, anything that has to do with GameStop, we are going to take a 100% collateral because it's too risky for us, because you might go bankrupt doing all those trades. But Webull doesn't have all that money to sit around, or even like Robinhood in this case, doesn't have that much money to sit around and set up as collateral. So they say, let's stop trading. The issue all comes down to this dang 2-day holding period. And this is where my investment comes into play, because I'm investing into what will be the future of this crappy garbage process. The process sucks. But get this. On December 6, 2019, the SEC granted Paxos, a company that does all crypto transactions for PayPal, the right to conduct a 2-year feasibility study for using blockchain technology to settle stock trades. That means rather than using this complicated central securities depository process that takes 2 business days, we could see near instantaneous transactions get settled through the blockchain. Paxos is a company that handles a lot of crypto transactions, and their goal is to be a major player in the DeFi space, which stands for decentralized finance. The CEO recently said in an interview, the actual clearing and settlement process of securities has not shifted for 40 or 50 years. The chart I showed you, 50 years old. The only improvement we've made, he says, quote, we've gone from trade plus 5 days to settle to trade plus 2 days to settle. That's the best we've done. However, he says there is a solution: the blockchain and cryptocurrencies. The CEO of Paxos says we could get to, quote, fully instantaneous settlement. Now, he does acknowledge that that might not be necessary, that we don't necessarily have to go from 2 days to instant, that it might be, quote, more efficient to do a batch every 2 hours and then you have everything batched together. But he says the fact that you can order toilet paper right now faster than you can settle shares of stock is ridiculous and old-fashioned. Now, this interview was done a few weeks before this Robinhood and GameStop crisis, but there is no doubt in my mind that once this feasibility study is over and has ended at the end of December of 2021 this year, it means that over the next few years, it's very likely we will start seeing stock trades get cleared using blockchain and stablecoin. This means the 2-day collateral risk is essentially gone, and we can YOLO all day long and squeeze the crap out of them. Well, I'm not going to say the word. We'll use the word loser short sellers. So what's my investment? Well, as people become more familiar with the blockchain, which is going to get forced and shoved down their throat once they start realizing that their bank is taking their money and turning it into stable coins in the future to transact faster and have lower fees in the future, people are going to get real educated real fast about the blockchain. Right now, people hear blockchain and a lot of people shut down because it's like, not associated with me, don't care, it's foreign, it's different, doesn't matter to me. But once this becomes the norm for stock clearing and for bank transactions, and we start seeing stable coins on the blockchain get used more regularly, I personally believe people are going to be very excited about making blockchain-related investments. Now, sadly, Paxos is a private company, and I can't invest in them directly unless you have a connection to get me into some of their seed funding rounds, which would be freaking awesome. But in the meantime, I have decided to make a different investment. And this is not to be confused with the crazy bet that I made yesterday. Yesterday, during a live stream, I invested $25,000 into Dogecoin. Or is it Dogecoin? Or is it Doggycoin? Or is it Bo's Dogecoin? Who knows? Either way, I put $25,000 in for entertainment purposes only, and I hit the lottery, and in less than 12 hours, I turned $25,000 into $72,000. Now, that was insanely lucky. That was really, again, done as sort of entertainment at the casino. I put it all on 35 on the casino, on the roulette table, or in the casino on the roulette table, and I did really well. So last night, I took my money off the table. I sold $72,000 worth of this coin, and I invested all of those profits and up to the whatever the difference between $250,000 and $72,000 is. The extra money I also invested, so that's how I got to a full $250,000 investment. I took all of that money and I threw it into Bitcoin. Yes. Now, I believe that Bitcoin is extremely volatile, and I know that. But I believe as the years go by, every single year that does go by, Bitcoin will become less risky. And Bitcoin will be seen as the investment into essentially the technology that is front running the change of our financial industry, that is going to solve the disaster of our financial industry that we have today that led to the crisis of Robinhood and GameStop. Now, I still believe that Bitcoin is much riskier than my Tesla call options, which I bought a ton of during the Tesla Tesla dip this morning, which I did that live with all of my course members. I bought $151,000 of January 2023 call options. I think the strike price was about $900. But anyway, I bought those out of the money call options this morning with my course members live. Just remember, use that coupon code. I did extend it again through February 2nd just to give some folks a little bit of extra time because so many of you had emailed me. But anyway, feel free to take advantage of that. But in the meantime, I personally believe that Bitcoin is, again, more risky than those Tesla call options, but less risky than investments into SPAC mergers that have no product and only a rosy investor slide deck to convince us to invest in their product, which does not exist yet. So there you have it. Those are my thoughts on what is going on and where I've put money because of the crisis that has happened. I now own 9 Bitcoin, and I'm excited to get to 10 at some point in the future, because then it's going to be really easy to know how much money I've invested in Bitcoin, because I just have to add a 0 to whatever the price is. Thank you so very much for watching. I really appreciate you, and folks, we'll see you in the next video.